All right, welcome back to Simply on Chain. Today, I am going to show you what I do to evaluate whether or not it is a good time to be making crypto purchases during a bull market. This method is very simple and easy to follow, but it is counterintuitive. So you really have to make sure you execute on the plan. And the method that I use is following the fear and greed index and buying during extreme fear. This method should really only be used during the bull market. Let me give you a little preview of the type of returns that you would have gotten if you followed this strategy during this current bull market. What we are looking at here is the beginning of the current bull market starting late 2022 and early 2023. The buy zones are the fear and the extreme fear areas, which are represented by the pink and the orange lines. So let's go back and take a look at the buy zones and compare them to the price today and see what type of returns we would have gotten. So at the beginning of the bull run, our signal flash and price was at around 20K, and then it was still flashing all the way until we were at 16K, which is actually the bottom of the bear market. Price then went on to rally and then had a quick flash crash here at around March 12th. That purchase price would have been around 20K. Price then went on rising up, down, all the way up to around 30K before there was another crash down to 25K where it triggered our buy signal again. This means that we were buying anywhere between 16 to 25K. Let's say on average our purchase price was 20K. If we use today's numbers to calculate return, we would take 60K minus 20K divided by our purchase price, which is 20K, which is 200%. If you had dollar cost averaged instead of buying during times of fear, your purchase price would have been around 35K. That's roughly 71% return. Now, buying whenever our signal triggers actually isn't very easy because if we go back and look at the news items whenever our signal triggered, they were times when sentiment was really bad. For example, in March, when our indicator triggered, this was when the Silicon Valley Bank crisis was happening. Actually, prior to that, you see this huge dip in crypto right here. At around this time, this was when the whole FTX ordeal was happening. This would have been the absolute perfect time to buy at 16K, but the sentiment was really poor. So here is the agenda for the day. We are going to go over how the fear and greed index actually works. We will then do a more detailed chart overview that will be followed by an example from a previous bull run. And finally, we will talk about where we are currently. So how does the fear and greed index work? So first you go to this website. The link will be in the description box below. And here you will see the fear and greed index on the left side of the page. Currently it's at 29. In the middle, it'll show you some historical values. If you are curious about how this number is aggregated, you can read through this data sources section below. Ideally, you want to buy when this number is under 25. Now, moving on to the chart overview. The pink represents the extreme fear sentiment. This is the most ideal time to buy. As a reminder, this should really only be used during the bull market because during the bear market, sentiment is almost always going to be in extreme fear. The second best time to buy is when the fear and greed index is in between 24 to 48, this section right here. This section is defined by the fear range in orange. Anything beyond this range, above 48, I am typically not a buyer unless you have absolutely no skin in the game at all. To see how this would have performed, let's take a look at the bull run from 2019 to 2021. If we had bought at around the extreme fear and fearful areas, in this section, we would have been buying at around 3.5K. We would have been buying between 10K and 7K in this section. And then we would have been buying at around 5 to 7K in this April 2020 section over here. Now, let's say we are being conservative and we purchased at an average price of 7K. Let's say you sold close to the top just for comparison's sake at 64K. This would have given us right over an 800% return. If you had simply followed a dollar cost averaging strategy, your purchase price would have been between somewhere around 15 to 20K. Let's just use 15K as an example. That's right around 300%. So where are we now? Last week actually gave a golden buying opportunity when the indicator flashed to about 17. I bought both Bitcoin and Solana here. A lot of people were actually selling during this time because of the unwinding of the Japanese carry trade. But ironically, this was the perfect time to buy. That's it for today's video. If you are interested in getting weekly updates, make sure to subscribe and hit the notifications icon. I will see you next week.